Yesterday we had the Fed chairman, Jerome Powell. Uh, he delivered a speech yesterday. So let's quickly discuss about Fed chairman Jerome Powell's speech that happened yesterday. That taken place yesterday, his press conference, and every other thing that is involved. Because this is something that is very important to traders, and so many people don't even know about this. What people kind of fixate most about is the technicals. And as much as I am a technical trader, I think when you mix it up with microeconomics, okay, maybe micro or macroeconomics, and you understand the state of the economy, you understand the state of what the country at the we're trading a currency, right? Especially as a currency trader, you're trading a currency. For every currency there must be a country. You need to understand the state of that country. Is it strong? Is it weak? Is it stable? These are things that needs to be well understood before you can actually place a trade, or you can place a bet on that country that, okay, this country is going to beat this country at their game. Because when you're trading pairs like this particular one on the screen is NZD-JPY. Okay, NZD-JPY. All right. When you're trading a pair like Kiwi yen, if you're selling Kiwi yen, what you're trying to say is that Japanese yen, right, is going to beat New Zealand dollar. Okay. And that means New Zealand dollar will get super weak and Japanese yen will get super strong. So what makes New Zealand dollar get super weak and what makes it strong? My brothers and sisters, it is not on the chart. The chart is simply a representation of seeing it weak and seeing another one getting stronger. But what really makes it weak and strong is what is in the economy. Okay, is the gigantic fundamental that we all try to avoid. Personally, I try avoiding it for like years, but it was quite hard because as a swing trader, your primary assignment is to understand the long-term projection of the market. And the best way, or let me say the easiest way to do that is by understanding microeconomics. Okay, so if you're a swing trader, I'm talking about people or person that is considering or that is open to leaving a trade to run for days, even 2 days. You're a swing trader. If you're not open to leave for weeks, maybe months, then you are the biggest swing trader the world has ever seen. I'm just kidding, you know that. But what am I trying to say in essence? The reason why I love talking about the economy, even though I'm not super strong in that aspect. If you actually see my video, you know that I'm roughly around, let's say, 58% when it comes to economy and when it comes to fundamentals. My general view, my general knowledge about it ranges from 58 to 70%. Okay, 58 to 70%. I'm not 100% yet, but I'm working on it. And the fact that even just a measly 58, let's just say 60%, just a measly 60% understanding of the fundamental will really help you when you now have a gigantic 110% technical understanding, because my technical prowess is super strong. I've been analyzing the charts since my first year of forex as a forex trader, and that is not even a cap at all. Okay, I've been analyzing the chart. I understand every single thing you think someone needs to know. I've tried it. I understand Elliott wave to a large extent. I understand SMC, ICT, all those stuff. I understand it. Support, and everything. You can name it. I understand all of it. So technical aspect, I don't have a problem. When I had a problem back then was the fundamental. Then I have to dive into it. I have to get some software, and it gets super interesting moving forward. Okay. So what am I saying in essence is because what I'm about to discuss with you, some of you might find boring. When we're talking about fundamental, it's actually very boring and it's very, 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 very tedious to even explain. But I'm going to take some time and I'm going to see how I can make it very fun so you understand what I'm talking about. So yesterday, based on my time zone, okay, the Fed chairman Jerome Powell had a speech, and he talks about the U.S. economy, talks about the Fed fund rates and why they are leaving it unchanged for now. Okay, and the first thing he made mention of is the biggest elephant in the room, which is the tariff. Okay, tariff is like the talk of the town right now. It's very popular, and one of the things he said that struck me is that no one really knows. You can see right here. However, he emphasized the uncertainty about their ultimate target. And what target? Tariff target. Nobody really knows how tariffs will impact the economy. And I actually said this to a few of my friends some time ago that no one really knows. Okay, you can never tell. Okay, how tariffs is going to impact the market. Okay, so he emphasized the uncertainty about the ultimate impact, stating that the Fed is still assessing what will be tariffed, for how long, and at what level. We are still figuring it out, and it's part of the deal. Okay, or let me say it's part of the old order. All right. So, what is the Fed's projection in 2025 about the rate? Okay, what he said basically is that the Fed is projecting 2 quarter point rate cuts by the end of 2025. So, they're still going to cut rates, but for how long? At what? 2 quarter points. So, they're going to cut 50 basis points at some point. But when are they going to do that? No one knows it. Nobody knows. Some people actually forecast, there was a speculation that it's going to get started in June or thereabout. But I'm not super sure. And I don't really want to speculate right now as to when the Fed will start cutting their rates. Okay. But one way or the other, there's a projection that there is 2 quarter points rate cut by the end of the year, 25 basis points, which will probably ends up with a 40 basis point at the end of 2025. So that is what we are still holding on to right now. So what was his take on inflation? Powell said inflation remain above 2% target. Like I said earlier, ECB also have the same view on the inflation rate. They are looking forward to see if it can come all the way down to 2%. With core PCE, which is personal consumption expenditure forecast for 2025 raised to 2.8 from 2.5%. So the core PCE also get bumped up from 2.5 to 2.8. But the Fed is still quiet. They remain optimistic that inflation rate will possibly readjust itself as time goes on. However, the whole ordeal is still surrounding the impact of tariffs and how this is going to factor into inflation rate. And I guess that is the reason why the Fed decided not to cut rates this time around. Okay, so you can also see what was written here. Powell emphasized the Fed focus on separating tariff-driven inflation from the broader trend to refine their response. Okay, you need to separate it. You have to differentiate between the inflation that is being driven by tariffs and the one that is actually affecting the household in the United States. Okay, the household, the citizen. Okay, and that can be quite hard considering the fact that the United States is a consumer-based country where people love to buy stuff, especially from Canada, from China, and from one of their another top partner, which is Mexico. Okay, amidst others. Okay. Now talking about the labor market, Powell described the labor market as solid and broadly imbalanced. And I said this earlier on, I think in the last video I recorded when I was talking about the US economic report. I said the labor market in the United States is still quite strong. Okay, it's very stable. We have 4.1% unemployment rate, and then there was the NFP report was around 151,000 new jobs was added. That is quite good. Okay, that is quite good. So the labor market is still very strong, broadly balanced, and everything still looks pretty intact. Okay, so we can't boldly say right now that the US dollar is weak. Okay, or let me say the United States economy is weak. We cannot say that right now. So consumer confidence, I think that's the second to the last. So about consumer confidence, Powell addressed consumer sentiment indirectly, suggesting that economic activity is stronger than sentiment-based reading indicate. Okay, so the consumer confidence that was released on Friday, I'm talking about the University of Michigan survey about the consumer confidence, actually indicates a bit of a sluggish economic activity. But what it's trying to say here is that the consumer confidence, the one that was released by the University of Michigan through their survey, is actually stronger. Okay, it's stronger than sentiment-based reading as it was indicated. Because I mean, it's trying to say that what was indicated, the survey is not super the best, because on his own point of view, he actually paraphrased a little bit on that one. He didn't really dwell on it for long, but he was trying to say that yes, in his own opinion, so I'm quoting right here, that he have a stronger than sentiment-based reading in consumer confidence, and that's more like what he did. And you can see he downplayed the sharp drop in consumer confidence report in February. Like I said again, he didn't dwell on it. It's more like a sentiment-based. So he just kind of paraphrased around it and said he's still pretty solid on consumer confidence, and that's more like it. So now, to avoid me talking, because I can stay here for days, okay, talking about the economy, because I love talking about it, even though I have just 60 to 70% broad understanding of the economy, and I have to complete that. All right. So Powell expressed an overall positive outlook on the U.S. economy, describing as strong and resilient. And if anyone asks me, I'm going to say the same thing. I see it as what? As a strong and a resilient economy. Okay, it is strong and it's still very resilient. And if we take a look at what we have right here, okay, on the economic heat map, if we take a look at the actual that is getting loaded up right now, we see that the economy is still pretty much decent. We've talked about this. Nothing has really changed since last time we checked, which was day before yesterday. GDP growth looks pretty good. Manufacturing and service PMI super solid. Retail sales was sliding down, which is not super good. But the CPI year on year, PPI year on year, and PCE, they all look quite solid. Okay, and then we have the wage growth, we have the unemployment rate, we have the initial jobless claim, we have the job opening, and then we have the non-farm payroll. They all look super cool as well. These are very nice and smooth economic indicator and economic number, in my opinion. If you compare this with every other countries in the G7, okay, you will see that this will beat them hands down. And why are we not going? Probably, if you're looking at US economy as comparing with the kind of fantasy we have about the United States, then you can say dollar is weak or US is weak, because we don't want everything to be like 100% when it comes to the United States. I mean, that's what everybody wants. But we can't live in our Lulu land, in our fantasy land, our fairy tales land. We have to focus on reality. And based on the data we have at hand right now, I would say that dollar is still pretty strong, 70% based on the data we have right now. And this is also my own personal opinion. I might be wrong, but based on what I'm seeing right here, it's quite different from what we are seeing on the chart for a very long time. So having talked about the economic heat map, let's take a look at the top setup, and then we'll jump into technicals, and then we'll wrap everything up today. So taking a look at the top setup right here. First off, you can see pound Aussie still remain at the top. Gold is also reading very bullish, which is quite good. And finally, we have silver coming up gradually back to the mix. So I like the fact that silver is back. I will possibly consider buying silver, but I'm still anticipating for a much deeper pullback. Okay, if I can get a pullback from silver, that would really help me to know what to do moving forward. Okay, we have pound card here also. We have Bitcoin reading bullish. This is good, guys. This is good. Bitcoin reading bullish, signaling something really decent. And I'm gonna record a separate video during the weekend on my view on Bitcoin, my long-term view and my short-term view on Bitcoin. Euro dollar is dropping back to 6. I think I'm still expecting a deeper pullback on euro dollar, but considering the effect of what the Powell said yesterday about the economy, seems to be getting the US dollar. I'm talking about DXY. It seems to be getting it pretty weakened a little bit. So I'm holding off on my euro dollar trade right now. Euro Aussie still looks quite bullish. Okay, I'm going to talk about that for a minute, or probably I'm just going to talk about it during the weekend. All right, and my trade, I'm still kind of like hung up on my yen trade. I took a trade on Aussie yen, and my dollar yen is still quite there. USCHF still quite bearish with -5. Kiwi yen, which is one of the pair I discussed in my last video, that it is a very possible short, and everything seems to be playing very well right now. So let's quickly jump into that. All right. So let's start from the very top, DXY. Okay, DXY looks quite skittish at the top. All right, you can see it's still finding it pretty hard to decide on what to do right at the bottom here. Is it gonna break above here, or is it just gonna tank forward? I'm thinking. I mean, at this point, I wouldn't mind seeing dollar actually drop further to the downside. Okay, possibly back to this region, where it was last year, September, October, before this massive pump. All right. But that is still highly speculative. Personally, for me to really trust this momentum, I would say I want to see it come back here before it drops down. But that is just my own opinion. However, if we look back in time, how long has dollar done something like this that it really wouldn't do any serious pullback? You can see back in time right here. Here with that. So okay, you can see this kind of crazy dump, and they pull back for a minute, which is not this definitely not going to be up to 50%. Drop further down, see this very weird pullback, and drop further down. So we might be getting almost the same thing right here again, repeating itself. But that is still very speculative. We're going to see how that goes. There's no 100%. I'm not here to tell you this is how it's going to go. I'm just going to watch and wait with you guys. USDJPY is a trade I'm still holding right now. Okay, it looks quite clean. And I told you on Tuesday, when the video was dropped on Wednesday, that if we get a candle that closed below the spin bar, this particular one, you should take a shot. And that's exactly what I did. Actually, I already taken this one, dragging all the way to the top here before it started dropping down during the forward speech. Now, am I going to keep holding this one for sure? Is there a guarantee that the market will continue to go down? Zero guarantees. Okay, but when you look at the economic heat map, when you look at the trend that's coming to the dollar weakness, and you compare that with the yen strength, you see that this is a very good shot. Okay, and consider the fact that the market actually come all the way back to be testing this trend line again. Okay, that is very good. And then the last one is that the market came all the way almost touching 78.6% Fibonacci level. That is also very good. Okay, I have all these technicals surrounding and supporting this particular trade. And fundamentally, dollar, okay, DXY seems to be getting weaker on the chart, and JPX, which is Japanese yen future, seems to be going to the upside. I shared the chart with you the other time. So I'm saying, when you mix it together, this actually makes absolute sense. All right. The next pair is Aussie yen, the one I took this one yesterday, which is quite good. All right. You can see we have this pin back candle also very, very bearish. And then we had another one that closed very below it right here. I took this trade and it's making absolute sense right now. Okay. The same thing is happening on Kiwi yen, but we're going to talk about that just in a minute. So looking at this also, this Aussie yen, you can see that everything, this is daily time from Nigeria. And when you look at this, okay, we have a momentum, a bearish momentum. The market is making a decent lower highs and lower lows. Okay, lower high, lower low, lower high, lower low, lower high, lower low, lower high. It's quite decent. It makes absolute sense. It looks pretty perfect. If I'm gonna tap out of this trade, first of all, it has to break this trend line. Once it breaks this trend line, I will possibly consider getting out of it. And also, if break the trend line and break above here, possibly I will close the trade and look for something else. But right now, everything looks quite strong. Is yen strong? Yen. Is Aussie strong? No. Is it weak? Pretty much. All right. So that is another reason why you want to take the trade. Moving on to WTI, which is the fall trade I'm still holding. It seems to be pulling back right now quite nicely, but it's a lot of pressure, putting lots of pressure on my particular trade, on this particular trade, excuse me. And why is that? Because of this demand zone right there. Okay, it's part of the whole of you. There's nothing I can do right now other than just to chill, watch, and wait. Simple as that on WTI. Well, once it breaks above this trend line and it finds its way above this region, I'll probably close the trade a very small lot because the position is actually pretty small. NZDJPY, I shared it with some of my guys, okay, and some of them actually took this one. It's a no-brainer kind of trade, okay. We have a pin bar right here that converge with this particular trend line and also fall around 61.8 Fibonacci. That is it. And then we saw this daily candle that closed bearish like this. I mean, just take the trade and go to bed. Put your stop loss above 78.6% Fibonacci. The moment this region is successfully broken, the moment this trend line is broken, there's no reason why to hold this trade again. Just leave it alone. Simple arithmetic. It doesn't have to be complicated at all. Okay, that is that. CAD JPY also the same thing, the same setup, and the same thing I explained in my last video. There's no brainer to this as well. Some of my friends, some of my guys are also trading this. We have this candlestick right here, coincide with what 50% Fibonacci, lower low, lower high, lower low, lower high, come back to 50% Fibonacci, like I said earlier, retesting this particular demand zone also. Okay, everything makes sense, okay, based on the technical perspective. Now, on the fundamental perspective, or on the fundamental angle, CAD, is it strong? No. Is it weak? Pretty much. Okay, not strong, not extremely weak, but it is getting weakened. All right. Yen, is it strong? Super much. All right. So, economically, fundamentally, technically, yen is pretty strengthened right now. And considering what Bank of Japan governor also said, he said they're still pretty strong. They're looking to see if the inflation will probably get eased up, but they're still looking to hike rate this year, 2025. Fed is looking for a 2-quarter rate cut this year, and CAD is still, Bank of Japan is also looking to hike rate maybe once or twice before the end of the year. Potato, tomato, everything still looks pretty tight. I mean, that is very good for both of the country, and I happen to be holding this trade. However, I'm not heavily involved in this trade. I'm easily into it. Just a slow-paced kind of entry. No pressure, no drama, just a slow-paced entry. That's what I'm doing right now. Okay, I only have UJ and AJ. I didn't put all my eggs in one basket right now. I spread it around. And pound kiwi is another one that I took. Okay, I took a very nice buy trade, I think somewhere around on Tuesday. Yeah, on Tuesday, you can see right there, the market will come back to this region. Actually, I had 2 plans on this one. Okay, I was expecting it to come all the way down to this region right here, so I can take a buy there. But I didn't want to miss out the same way I did on pound dollar. Pound dollar, the same thing happened when I was expecting it to come all the way down to retesting this previous structure, but it never did. And what happened instead was a very crazy jump over 500, almost 500 pips jump, and I miss out on all of them. And I don't want the same thing to happen to me on pound kiwi. So what I did was I jumped in a very small position around 0.0, let me say 0.03. On another account, I did 0.01. Okay, and I was expecting it to come all the way down here, so I can add up to the trade. Probably 0.02 on this one, and probably 0.01 on this one to make it now look more fancy. I mean, the profit will now look probably pretty much good. But so far so good, it still looks quite like it looks quite good because I'm glad I took this trade. But it doesn't look like something that's ever going to come back here. But if it did, I'll probably add on to the trade. I'll get tapped at break even here, possibly, and I will add on to the trade and see how it goes moving forward. But right now, I'm still quite solid on pound New Zealand dollar because when you look at this right here, pound kiwi has been up for a very long time, and I saw it when it came down here. I think I picked some trade right here, but I kind of closed it very early. But right here, I wasn't going to miss out on this one for sure. So you can see the momentum, all right, it's been there. So why not just wait and see it goes further upside? So that is all on my trade. Okay, like I said, watch out on during the weekend. I have some information to share with you about the workshop that I'm planning to host or start in April. And then I'll also drop some analysis as regard crypto, both on the short term and the long term perspective. So with that said, I will see you guys in the next one. Do have a fantastic day. And please trade safe. Don't exceed your margin, don't do too much. I'll see you in the next one. Have a fabulous day. Bye for now.